Hammer and shooting star candlesticks. The hammer is a bullish reversal candlestick pattern formed by a single candle. It resembles a hammer, with a small real body near the top and a long lower wick. There is little to no upper wick. The lower wick should be at least 2 times the length of the body, indicating that sellers pushed the price down, but buyers stepped in and pushed it back up by the close. This shows potential reversal from a downtrend to an uptrend. Example of a hammer candlestick. As the price was trending downward, a hammer candlestick formed right at the support level, signaling a possible reversal in momentum. This candle pattern appears at the bottom of the downtrend. The long lower wick shows that sellers were initially in control, pushing the price lower. However, buyers stepped in, absorbed the selling pressure, and pushed the price back up, causing the candle to close near its high. This behavior reflects a shift in momentum from bearish to bullish, making the hammer a strong bullish reversal signal, especially when found near key support levels and confirmed by bullish candles afterward. The shooting star is a bearish reversal candlestick pattern formed by a single candle. It resembles an inverted hammer, with a long upper wick and little to no lower wick. The real body is small and must appear in the lower part of the candle. For a candle to qualify as a proper shooting star, the upper wick should be at least 2 times the length of the body. This pattern typically appears after an uptrend, signaling potential weakness in buying momentum and a possible trend reversal to the downside. The chart shows a clear uptrend, a series of strong bullish candles pushing the price higher. Suddenly, a new candle forms with a small real body near the bottom and a long upper wick. This is a classic shooting star pattern. It tells us an important story. Buyers initially drove the price up, but sellers stepped in aggressively, pushing it back down near the candle's low. This shift in control from bulls to bears, especially near a resistance zone, signals potential bearish reversal. The shooting star is a warning sign. Momentum may be fading, and a downward move could follow. Important points to remember when using hammer and shooting star patterns. Don't trade solely on candlesticks. Relying only on candlestick patterns like the hammer or shooting star can lead to false signals, especially in choppy or low-volume market conditions. Use in confluence with other tools. Improve accuracy by combining these patterns with trend lines, moving averages, support and resistance levels, volume, momentum indicators. Context matters. These patterns are most reliable at key zones, like support for hammers and resistance for shooting stars. Wait for confirmation. Always wait for the next candle to confirm the reversal before entering a trade.